Palantir is a hot retail stock that specializes in big data analytics. The company is certainly one that some love and others love to hate. But regardless of where you stand, the business is certainly a fun one to watch. Explaining the company Palantir to someone is a bit like explaining the internet back in the 80s or 90s.
So yeah, there's this internet thing, and you can send email, which is like mail, but virtual on the internet, and you can do a whole bunch of other cool stuff too. I promise it's going to be big.
People just didn't get it, and just like that, I also think that a lot of people who are discussing Palantir don't really understand what they do. And quite frankly, even after researching for this video, there's a ton that I don't understand about this company, and there's a good chance I never will. Anyway, Peter Lynch has something to say about this. Check out this clip.
So you can't explain to a 10-year-old in 2 minutes or less why you own a stock, you shouldn't own it. This is the kind of company people adore owning. They make a 1 megabit SRAM, CMOS, bipolar risk, floating.
2 hours later.
A token ring interchange backplane, and it does it in 15 nanoseconds of capability. Now, if you own a piece of crap like that, you will never make money. Never. And people buy this junk all the time. I made money in Dunkin' Donuts. I can understand it. And you laugh. I made 10 or 15 times my money in Dunkin' Donuts.
It is absolutely necessary to understand what you own, because if you don't, then when there's some market instability or your stock happens to go down, you'll freak out and sell at the absolute worst time. And we've seen a ton of investors do this very thing over the past couple months. So what does Palantir do? They've got 3 primary projects. The first is Project Gotham and is used for counter-terrorism by the United States government and their analysts. The second, Project Foundry, is used by large businesses in order to optimize various aspects of their company. And Project Apollo is used for a few different things and has several different applications. To give you a concrete example, let's check out this article that I found. The company's database has the ability to stitch together what otherwise might look like unrelated details that are found in both public and private databases. It can fuse together the fact that somebody has just bought a one-way plane ticket, they rented a condo, they're making large withdrawals from a foreign bank account, they make repeated calls to a watch list number in the Middle East, they rented a big truck, they're making trips to major theme parks. If you look at any of those things individually, it doesn't look like much, but if you put it all together, those could be precursors to a terrorist attack. We can see in their investor presentation that they have extreme complexity and incredible technological applications. This is all fine and dandy, but I'm just a normal guy without big data analytics experience or a software engineering degree. I understand the surface level concept, but I'm no closer to understanding exactly what they do and why what they do gives them lasting competitive advantage. To be completely clear, guys, I am not shooting down Palantir in this video. I have incredible appreciation for what they're doing, but I'm being honest that I do not fully understand their product, and just because I do not have technical expertise in this area, I don't think I ever will. And I have a hunch that a lot of investors in this company or people who are extremely bullish on Palantir, they don't understand fully either. Look at a company like Starbucks. I understand Starbucks. I understand their business model. I understand their product completely. I've had coffee. I know what they're doing here. And there's just not that same level of understanding when it comes to Palantir. However, I do understand Palantir's revenue structure and their customers. They primarily deal with large government contracts or large corporations. Essentially, they have a small number of clients, but all of their contracts and business deals that they do are very high dollar value. On these 3 pages of the investor presentation, we can see that they've got strong revenue growth, they're adding customers, and just overall on a good growth trajectory. Palantir signed a large deal with the U.S. Department of Veterans Affairs and won a 2-year $60 million award from the NIH. This page gives us insight to their customer breakdown. We see that they're dealing with a very small number of overall customers. They had a nice 20% increase in that total number here in Q3. And we can also see that the average revenue of a top 20 customer is also increasing. Both good things. On this last page that I'll show you, you can get a big picture outlook for the company, and you can also see it's guiding for 30+% revenue growth for the next 4 years. Here we can see Palantir's nice revenue growth year over year, and as we just took a look at a moment ago, they're guiding for 30+% revenue growth for the next 4 years. If you do happen to be a shareholder of Palantir and Palantir misses at any point on that 30% revenue growth goal, I promise you the stock price is going to take a massive hit. Palantir is still very much in growth mode, so margins, be it gross margin or operating margin, as well as net income, really is of no concern for Palantir. They're not in money-making mode, so that is really not a major criterion for this investment. The main thing for a growing company is to at all times remain solvent, and a good thing to look at is their cash and cash equivalents. They've got over $2 billion in cash, which is pretty unique because their revenue is only $1.4 billion. So this company has more cash on their balance sheet than they generated in revenue over the last 12 months. Very unique. Their total current assets is $2.8 billion, and we can compare that to their total liabilities, which is $976 million. So they're in a very good position here on the balance sheet, but keep in mind, they're likely to have to continue raising money because they are a money loser. And if we scroll down here to cash from financing, we see that they have been issuing some common stock as well as issuing some debt. None of these numbers look too terribly troubling to me, but just understand that it's normal for a growing, money-losing company to have to dilute you as a shareholder by issuing new shares to raise money. When it comes to the valuation, it's clear that a lot of growth is being priced into Palantir. The current price to sales ratio is between 15 to 17, which is incredibly high, even after the stock price has come down significantly. I don't think there's anything inherently wrong with buying a growth company, but it's important to understand how much future growth is being factored into the current stock price. To help us understand this, let's play a game called What Will It Look Like for Palantir to Get to a 20 price to earnings ratio? I'm going to explain this one for you guys. I've got two different scenarios, but we're going to assume Palantir's starting market capitalization is around $26 billion. In this first scenario, I'm assuming that Palantir's revenue is going to grow by 30% each year, and ultimately Palantir will achieve a 20% net profit margin. It's difficult to know exactly how profitable of a company Palantir will be. Some industries have net profit margins that are super low, like 3 or 5% in the auto industry, and other companies manage to have extremely healthy margins, such as Apple, which routinely gets margins around 25%. In any case, I think I'm being pretty generous here by giving Palantir a 20% net profit margin. So, if we assume this, how long will it take for Palantir to get to a 20 price to earnings ratio? They finally achieve it here in 2027. In this second scenario, I assume 25% revenue growth for Palantir and a 15% net profit margin. In this scenario, Palantir will not achieve a 20 price to earnings ratio until just after 2029. All I'm trying to do, guys, is show you that there's a lot of future growth being priced into Palantir. I'm not saying they'll ever get to a 20 price to earnings ratio. They'll likely have many years of growth priced in, even years into the future. All of this is a thought exercise to show you what you're actually paying for. To wrap up the video, guys, I am not going to be a big buyer of Palantir. As I mentioned, I do not fully understand the company and therefore cannot put much of my own capital at risk. Also, they have a lot of future growth priced in, and if that growth trajectory starts to get a bit worse, this will be reflected in a lower stock price. There's a lot I could not get into in this video, such as their crazy CEO, Alex Karp, so if there's anything that I missed, please leave that in a comment down below. If you've made it this far in the video, thank you so much for watching. Don't forget to like the video, comment down below, and consider subscribing. Until that next one, peace.